afternoon, everyone. It's Chris from Solstice ATR as well as Axel. Enjoy your long weekend. You can find us on the website, Twitter, Instagram, Discord. You can DM me either on Discord or on Twitter. Remember, we use this adaptive algorithm for side market, up market, or down market. Remember to smash the like video on YouTube, share it with your friends, and give us your commentary and let us know how we can help you out. Let's go to the first slide that I have up here, and I put Trump 2.0 inauguration as well. Enjoy the holidays. Martin Luther King Monday is a day off. Have fun with your family, friends, and loved ones. Let's go to the next slide. Remember where the website is. Give us your commentary. Let's go to the first slide that I have up here. I put the S&P 500 annual chart from January 24th, the low, which was on 1/5/2024 till the high in December of the 19th of December of 2024. We got a 48.2% return from October lows, which was 235 bars going up. We got a reset from the high till the low, 4.36, and I'll show you how to use that. We get a measuring tool. We take the highs of this to the bottom of this low that we had. We had a 5.36, and eventually we filled this gap up here, which had the run up. We got the gap 100% filled and reversed up. We got another gap up here. I'm going to show you all these gaps. We have one here from February 1st. Another one, we have another gap from May 2nd. Another gap we have on August 12th. And this gap was filled. So all these gaps are virgin gaps. Eventually, over time, they do fill. You can see whenever we fill a gap, we come fill it on the way down, and on the way up, when we go back up, we come back down and fill it. Eventually, these gaps are possible. We are still in an uptrend. You can see that uptrend channel that I have on the charts from 10/26/2023. Till now, it's in an uptrend channel, the SPX. As long as we stay in that uptrend, the sentiment's still more bullish. But the 18 has crossed the 50, and now the 18 is trying to turn with the 5. But we ended up holding the 89 EMA, 116 simple moving average, 200 SMA, and the 250. Usually this area of consolidation on the July to August low, you can see we tested the July. We tested it back in August. We came back, retested it in September, rallied up, came back to the lows in November, came back in November, October, November, retested this whole area here and bounced up. We did not come back to test this area. This area is going to act as a major support on the first test coming down to here. I'm not saying we have to come down. And does the market give us an overall view what the sentiment is? So we have to pay attention on the short time frame. We can see that we downtrended, rallied up, downtrended, rallied up, but we're getting higher lows. But this one broke out of that downtrend channel. If I put a linear regression downtrend channel on it, you can see we tested it, we closed right on it on the charts. Or even if I move it to the upside here, activate it. Hold on, let's activate it. Grab this point here. Oops. Let's just redo this. We can do it either way. There it is. That's inverted, so we can just go like this. Move it down. Sometimes when you toy with the studies or the channels, there we go. Since we put it this way, as you can see, that downtrend channel is still intact until we touch up here. Can we continue up? Yes. But I'm going to pay attention to the tech sector with the S&P 500 due to the holdings in the Mega 7 or the Fantastic 7. They consist of Apple, Amazon, Alphabet, Google, Facebook, Microsoft, Netflix. I know it's not part of the Mega 7, but in the Mega 10, I got Netflix, NVIDIA, as well as Tesla. So that downtrend channel, we stayed intact. You can see it but we are in a linear regression downtrend channel on the SPX. We got this professional gap. We had this gap. We eventually came down and rallied back up. We have this gap up here. This one is no longer valid, but I wanted to show once the gap is fillable, no longer valid, I usually take it off. Now we have a gap between here and here. What I usually do, I get a box and I measure that distance between here and here. This is a professional gap on the move up, and I move it back to the left couple of times and I'll move it to the right couple of days, so that way we can keep an eye on it where it is in relationship to the overall market. So it gives us an overview if those gaps are going to be fillable or not. So this is the area that we have to pay attention than the ones lower on the other side. So that's S. Let's go to the NASDAQ index. And what I wanted to do is show the same thing from the January lows on that was on the date was on 1/1 of 2024. That was the low for the year. We rallied up to July. We fell back down in August, then we rallied up. We did the push up. We created some kind of a W, but couldn't take over that 20,000. Let's call it 690. We rallied up here. We retested it in this area. This was the consolidation, then rallied up, came back down. Look at the retest of this area. I'm just going to zoom in here to show that 20,690, we tested it more than once up here, rallied up, came back. What did the market do? Test this area and bounce back up. But we have this gap up here. You can see in the NASDAQ, we really never filled this gap up here. If I edit the property, I'm going to extend it all the way till 2025. And we're going to put it on the first so everyone can see it. We can move the date a couple of days more. We're just going to make it one off. So to 25, 26, 20, 26, okay? This is, oops, it didn't go. Edit. We didn't put 25. That's my fault. 25, 2601. Okay, push OK. That's the extension on that, and I can do the same thing here. So we have two gaps on the way down, but on the top we have filled the gaps. We're going to do 26 and backwards couple of days so you can see where that gap is on both sides on the NASDAQ 100. So let's take a look at the Mega 7. And what I want to do is bring in Apple here. And the reason why I wanted to bring in Apple, you can see that there is weakness in Apple after that large rally that we had in November till December high. Apple has been grinding lower. We lost that uptrend minor channel because we have this one down here. If I take this low to here, it's basically violated. So if I use a linear regression uptrend channel and I put it to this number here, so what we can do is get that channel, draw it up, pay attention to that linear regression uptrend, and this is a very major line. If it loses it, because it lost the 116 just closing on it, the 50s up here, it tested it and failed the 38.2, because if I take the fib from here nearest high to low, that was what the basically on the daily chart the Fibonacci did. That's a 38, 50, 61. We fell through. We have the 18 on top and the 50 on top. Now the 50 is acting as resistance in this uptrend channel. What I'm going to do, since we broke it, I'm going to just make it a little smaller lines so you pay attention to where that line is in case it comes back and closes above it. And we can duplicate this line up here. If I take this line here to here, you can see this uptrend channel. We kind of in a wedge, but we are uptrending. If we lose it, I'm paying attention to the 200 SMA and the 250. The reason behind this, because after looking at this area and we have failed this consolidation, what I can do is grab a box to show you how to do this. If I grab this area like this and I do a box around here, as long as I'm underneath this area, that's a very important area to clear on the way up in Apple to continue higher. If not, I'll look at the consolidation down in this area. I'll show you how to look at a box and do another one up here. And that would be the first area that I would look for in the consolidation in Apple for a purchase, because this consolidation, this large area here, there was a lot of congestion between the top and the bottom. That's the 50% retracement in that consolidation, and that 61.8 fib will act as a 38.2 on the annual chart on Apple. So this is how you look at Apple in relationship to the overall market from the January 1st, 2024 till the high. That 61.8 will act to 38 and the 38 will act to 61, vice versa. And the 50% is the midpoint. This area is very important, and the 38.2. So I hope this will help you in that. And I will show you Amazon. See, Amazon is a little bit different. I'll show you NFLX, similar. I'll show you Google. So I don't want to go through all of them, but I wanted to give you an overall view because part of the NASDAQ 100. What I would now pay attention to XLRE in the real estate because there's going to be a lot of development after all the fires that happened in Southern California. I hope all these people have a place for them. They be able to recover from it and be the insurance companies will pay back those people in order to purchase those homes, and the people that didn't have enough insurance, that's going to be a little bit burden on them. So let's go look at XV. And this is in the healthcare sector. You can see that XLV, the annual high to low, we rallied back up, but we are in consolidation on that downtrend channel because you can draw a linear regression downtrend channel. If this channel is broken, this will give us an opportunity to be long in it and pay attention to that sector. And you can have another one from here. We can dot it out. We can put it on this one, and we can put it, we can make it dotted because when we retested it, edit the property, you tested it and rejected. What we can do is dot those line on XLV. You can look at that healthcare sector and pick companies in there such as Johnson & Johnson, ISRG, and other companies in there in that area. Next, LRE is in the real estate. These are part of the S&P 511 sectors. I do have them listed up here. It shows you the S&P 500, the energy, discretionary, financial, utility, material, and so on, consumer staple, info technology, real estate, industrial, healthcare, and telecommunication. You can see that the real estate, after that plunge, you were coming out of a downtrend channel. You retested where? If you take the 0 to 100, you retested the 38.2 and bounced back up and cleared it. Now we got to pay attention from this low to this high if we can clear the 50 SMA and the 50 Fibonacci and the 38.2 in the real estate area. So let's go look at the S&P 500. Now we'll show you how to use the micro ES measured move on the daily. I want to keep this video short since it's the holidays. Let's go to an intraday channel. We're going to do intraday. We're going to try to do about 20 to 30 days. We can do 30 days. We're going to use 6-hour chart so that way you only have 4 bars in 24 hours. The overnight is in the gray area, Asian European markets, as well as the American markets usually is East Coast from 9:30 till 1 o'clock. The equities and commodities are usually till 5 p.m. and some of the forex and minerals and other stuff, they trade a little bit different, a little earlier in the morning, and they finish up around 11, 12 lunchtime. California time or East Coast around 2 p.m., 1 p.m. It depends what instrument you're using. So if we were looking at last week's range, this is the high, this was the low. So if I look at this week's range from Sunday to the high, this is the range, so I can do a measured move. So what I want to do, because if you take the lows from here before I change it to this high, you can see how much the market rallied. It rallied to 4.3, but if I look at the close where it closed at, it basically was at 3.85 in the S&P 500 reversal. So I get the measuring tool, I take the highs for the week and the lows for the week, and this is the measured move for the upside as well as the downside, the extensions to the 180, 200 and vice versa, the extensions back to the minus 80 and minus 100. So we're going to trade what we see on the chart. You can see in the S&P 500, the E-mini, we did a inverted head and shoulder or a little cup here. This is the rounded area, and we rallied up and we continued on that professional gap from this area from the Tuesday, Wednesday, and the rally up. We had an inside day on Thursday, and on Friday we gapped up and continued higher. So we trade what we see, not what we think, in these measured moves, and the volume profile and moving averages do help you a lot. And I will show you the micro NQ. You can do that on instrument. By the way, it doesn't have to be and commodity. It can be an equity, can be crypto, can be anything else that you trade on the charts. And we can do the same thing here. And you can see that the extensions to the upside as well as the downside on the NASDAQ 100. Let's show you the micro BT, which is Bitcoin micro BT. Micro BT had recovered. If you can see the measured move from the prior week, I had put it up and I showed you the reversal. We were creating a downtrend. We rallied up, we fell back down, and we got 100% retracement of the move to the 120 at the 125 and came back in, and we are holding this area. This is the area that we fell from the prior year highs. You can see we retested that candle here, those two candles in the overnight. We did not fill 100% of the gap, because if I do it on a 30-day 2 hours, you just bring it down to 2 hours. And what I want to do is compress it in to show you that professional gap between the overnight oops, let's do this. I made a mistake. I should have put a box, and we'll finish up the video with this one. So if I take a look at this area to this area here, this is the gap where it is. Edit the property. What we're going to do, bring it to 25, and we're going to use the first of the year, January. We're going to use 26 here, like we did on the other one. So you can see where that professional gap, we tested almost 100% of it. There was a little area that was left. Is this gap fill? Yes. Can it continue high? Yes. Does it reject it? That's what we're going to keep an eye on, that level. It's an important area, and what we can do, take the measured move, activate it. I'll show you how to do this again. We take this high from here. This is the high, and this is the low for the week. And we got our extensions on Bitcoin on either side, where the extensions can be for the momentum to be to the upside or the momentum to be to the downside. And I hope this video was very helpful. I'll put it on a custom. We do it on an annual basis. We're going to bring it back to 24. We're going to use it on a daily, and you can see that Bitcoin, after the rally from the beginning of the year on 123 to the high in December, we came back down. We were creating some kind of a shoulder. Then that shoulder got basically supported right here. We do have this from the Trump election, this professional gap. You can create a box here, and what I'll do, I'll put it in the charts so everyone can do it. So this is a professional gap in here. Edit the property, extend it to the right and left so everyone can see it. Let's just run it to the right side, and I'll finish it up. There we go. It's going to run till January. No problem. I don't have to change the data. I can show you doing it manually or just by pushing the button on the charts, and it'll do the same thing. Here we go. And you can see that gap here, and there's a gap up here on Bitcoin. Either way, but it acted as support this area, the 91,000 area, 90,500. This is a very important area. If it does come back through it, I'll look for the gap, then a big rally higher. So take care. Enjoy the holiday. Be good, and I'll see you on Tuesday.